Hey, good morning, everybody, or good afternoon, or good evening, depending on where you live in the world. Welcome to a little bit of a spontaneous live episode of That Crypto Show. Doing this live here today for a very good reason. Producing videos always eats up a lot of time, obviously, and I thought because of there's a timing factor really in the situation that we are seeing right now in the crypto markets that I should probably address it better live so you guys are informed on time. Great. So if you are watching this later on, of course, you can always ask your questions here in the chat. I'm sure after I said what I said, what I want to say actually about this technical pattern we are seeing right now, we will still have some time to discuss about things. But yeah, let's jump right into it. Just going to make my chart here a little bit bigger for you guys. Okay, I think like this, you should be able to see better. So what we are seeing right now in Bitcoin today, as we are speaking, is the formation of a so-called golden cross. Now, what is that, a golden cross, and why is it so important that I think it doesn't have time to wait until I can produce a video on this? Why is it so important that I think I need to address this here in a live stream? So, speaking solely from technical terms, a golden cross is when the 50 moving average, so the moving average, which is the blue line here on my chart of the last 50 bars, crosses the so-called 200 days moving average, which is the fat red line here on my chart, and it crosses it from being under the 200-day moving average and then crosses over it. So if I zoom in here a little bit, you can see this happening here right now in real time. So if the market stays like this, at around about, let's say, $23,000 today and closes later tonight at this price, we will definitely have this golden cross. Actually, I think the market probably would need to drop by like 30% or something today that this golden cross is not going to happen anymore. Why is that called a golden cross? Actually, I think it's a double golden cross because earlier, a couple of days ago, the moving average, the 50 moving average already crossed the yellow one here, which is the 100 days moving average. But textbook definition of a so-called golden cross is that the 50 moving average, simple moving average, crosses the 200 days simple moving average. So the blue line, the red line, from down to up. And this is very significant because I think probably tonight, latest tomorrow, you might see a lot of this being covered by media, by other YouTubers, influencers on Twitter, on social media, and so on and so forth, talking about this. And I think it's important to kind of look at it from a realistic angle because it's, so to say, one of the most important technical pattern when it comes to cryptocurrencies, when it comes to Bitcoin, because as legends tells us, this technical pattern always indicates that a new bull run is to start. And on today's live episode, I want to kind of try to separate the myth from reality. So we are going to take our sweet time here. We want to look a little bit into the past and see if this is actually really true. So in the past, if you traded this pattern, if you entered the market, if you went long in Bitcoin at the moment of this golden cross happening, was that something that would have been profitable for you? Or is this maybe just, a hoax, the newest internet hoax, and nothing you should incorporate in your trading, into your long-term strategy? So let's see how we can address that. So what we can do now, we can go a little bit back and have a look when was the last time that it happened, that the blue line crossed the red line from underneath. So we have to go a little bit back here. There we have the opposite, like it does, and I think we're closing in here. Okay, we saw this the last time happening here in September 2021. And as we can see, was pretty cool. There was a little bit of a downswing first, but after this, prices went up And so let's see here. So you would have, if you would play by textbook, you probably would have entered here. And then the highest prices were around here in November. So that's the last all-time high we saw in Bitcoin. So you would have had the potential here to make something like 43.5%. If you would have been a little bit more patient, you actually would have had the chance to, of course, also buy much, much lower. But we don't care about the timing right now for entry. We just want to observe, is this a valid pattern for trading? Okay, so last time it would have worked out very well. So let's go. That's 1 out of 1, so to say. Let's go a little bit further back again. I think probably need to go quite a long way back. Here we go. So that was here in, what was in May 2020. So I would say around about here. And let's see. Have to zoom out a little bit more. Actually would have caught the beginning of the bull market here as it looks, no? So you would have around about, let's say, entered here. And you could have held it all the way up to actually the all-time top, to be fair. We have to zoom out a little bit longer. So there's when the moving average started collapsing again. So enter here, and you could have held it all the way up to the all-time high there. So you could have held it all the way from where did we start, by around about $9,000 to the 54,000 US dollars. So that was the first all-time high we had back then in April in 2021. That would have been a performance of over 600%. So that is quite impressive in my opinion, right? Let's zoom in a little bit again and go further back. So all I'm really doing now is, because I want to have facts, I don't want to believe in the myths I'm reading on social media. I want to see, like, is this actual factual? Is this a thing, so to say? Now, we go back and we see there was another cross here happening around about here. And what we can see here, this one would have failed us. If we would have held this, for example, until it crosses under again, we would have exited about here. So we would have made a minus of 30%. And that's very interesting. Now, this is 2 times correct, 1 time wrong. And we all knew what happened back then in the beginning of 2020. So we're talking here February 2020, where the cross happened until round about end of March 2020. That was, of course, the plunge due to the beginning of the coronavirus. So a black swan event kind of destroyed this pattern in this case. And this is something you cannot take into account, because, I mean, by nature, black swan events are something that by definition is something unexpected. But you can see here still a minus of, okay, 30%. Still not too bad in my opinion. Good, let's go further back again and see when it happened before. So we have it again here. That was about, let's say, somewhere here at about 5,500 US dollars. And again, we had a significantly bull run after this. You could have made about 140% for this. So again, 3 out of 4 times we can see this pattern actually seems to be working quite well. But let's maybe check 2 more events. You know, better be safe than sorry, right? And we go a little bit back again. Seems like we have to go quite a way back actually. Wow, this is really long ago. Here we go. So it was happening here. So we are now in 2015 already. So about, let's say here, about the 30th October 2015. And then if you held it like all the way up, not saying like that this, of course, is always possible, guys. I mean, nobody perfectly times the top, but the potential profit of this would have been, in this case, 135%. So again, pretty good performance, in my opinion, for a pattern like this. And let's have another look. Here we go again, and we can see here we had it again happening earlier in July 2015, and that was a fake out at this time. So this time, if you have waited until it crosses under again, you would have lost around about 14%. Potentially, if you would have panicked, actually, you could have lost 40% or more than 40% when the markets went down. Okay, so what we are seeing here right now, I think, is a pretty valid pattern. Has like, if I'm not mistaken in my calculation now, a success rate of slightly over 60%. And the nice thing is, when the pattern is wrong, we kind of notice this very quickly. So we saw when the moving average going very, very fast again under the 200-day moving average. So yeah, it seems like this is a pattern. But of course, we need to see it twofold here. We need to put it a little bit into context of what we are seeing on the global financial markets at the moment. And I'll go into this a little bit later here. First, let's see if this pattern plays out today. And it just makes the, let's say, 40% we saw 2 times. That would mean we would see Bitcoin rise by 40% from the current price would be, I need to zoom out here a little bit, 40% about here, to roughly 32,500 US dollars in the upcoming weeks and months. That is, of course. So that could be a mini bull run, so to say, we might be seeing here in 2023. I bet you one thing, if that really happens, the FOMO is going to hit the markets very hard again. Then suddenly you will have your auntie, your uncle, your mama, your papa, your granddad, your grandma suddenly asking you about Bitcoin again if this happens. So a 40% upsize, and this is the minimum we saw from this pattern. We also saw it performing by 440% in one occasion, or 150, 130%. That, of course, would also be possible, but let's be a little bit conservative here. So if this pattern plays out, and it just plays out at like it did 2 times before with the lowest percentage winning, then we could potentially see Bitcoin in the upcoming weeks and months go to 32 or 33,000 US dollars. Now, we have to put this a little bit into context, of course, of what is currently going on the financial markets, right? Because we are seeing, as we are speaking here, a little bit of a risk-off move again. Risk-off meaning people are switching from risky assets such as stocks, also cryptocurrencies, back into safe haven assets, which means they are buying the US dollar. So you can see here, Euro US dollar has been taking quite a hit the last days, all the way from up there 110 down to we saw prices under 107 earlier today. You can see the same here in the stock market. S&P is still holding up pretty nicely. Same with the Nasdaq here, but you have to be a little bit careful. There is still this environment of potentially interest rates hikes on the horizon here for the next months, at least until mid of the year. So this would be something that makes me think, okay, it's the valid technical signal. I want to trade the signal, but I want to do it in a little bit of a conservative way. So if I have to trade it here, and first of all, I should enter my promo code currently. Have I actually activated that one already? I think this is the... Oh, I activated that one already. Okay, so guys, check out underneath the video. You'll always find our newest promo codes, of course. Usually we have a new promo code every month on our Telegram group. Link to the Telegram group you'll also find underneath the video, where you can either save some fees. So this bonus code actually was for saving 50% of trading fees, or you get a little bit of deposit bonus when you deposit some money onto your trading account. So that's always nice. So if I have to trade this one now, I probably would go by it a little bit more conservative. Maybe if, let's say you have this account here with 10K on it, where do we have Bitcoin US dollar on it, I probably wouldn't, throw like dozens of Bitcoin at it. The position, of course, needs some room to breathe. So with 10,000, maybe I wouldn't go higher than a one-on-one leverage, which in that case would mean maybe that I invest at this price here half a Bitcoin. here we go. So we bought now at 22,961. If I see prices really falling underneath 20,000 again, this would kind of invalidate the pattern for me, at least in the short term. So I give it like 10 to 15 or 15% of breathing room here to the downside, 15%, because that puts me in a good position when it comes to risk reward ratio. I'm risking 15%, but the upside is a minimum of 40%. So my risk reward ratio is actually here better than 2 to 1. It's more like 2.5 to 1. In this case, so in my opinion, that's pretty nice. That's a trade I would take any time in the future. All right, good. Let's see quickly here. Let's go through some questions. Francesco is asking, is the main benefit of a golden cross the reduction of volatility and risk? You have to know how to wait gap 50 days to 200 days. Well, of course, as a trader, as a general rule of thumb, you are always looking for volatility, because we, as traders, we need volatility. Otherwise, it doesn't make sense to trade if everything's just moving sideways. But of course, we also don't want to have too much volatility. So I'm looking for trades that have a positive expectation, so to say. And a positive expectation would mean I'm risking on this trade, as I just showed you, 15%, but my upside is 14%. So I can earn much, much more than I'm risking. Actually, like this, I only need to be correct with around about 40% of my trades, and I will still earn money, or at least not lose money, which always should be our first goal, not to lose money. If we then earn money, it's a little bit extra on top. Time frame question here from Zhang Wuli. What is the time frame that you usually watch? For this pattern is a daily time frame. I watch all time frames for my trading. So I'm usually active actually on the hourly charts for more intraday trading or swing trading positions, like I also do with our PrimeXBT signals group. So we have a trading signals group where I share my some of my personal trading signals that come from a strategy I call the sniper signal generator, SSG. Sounds a bit cheesy, I know. You'll find a link down there, because we're doing an open beta test where you can get those signals free of charge. So if you're interested to see more how I work, how I approach the markets on a daily basis, go and check it out. Might be worth your time. I hope at least so. So, okay, next question here. Do you believe we will see Bitcoin at 30K in the end of the first quarter of this year after this cross? Yeah, could very well be. However, like this is the thing. We need the markets to calm down a little bit about the fear of potentially interest rates, especially in the United States, going higher. They will probably, the Fed will raise the interest rates more. But the markets are always playing the future. So nobody will care about what happened last time with the interest rates. Everybody will care about what might be happening, in Q3 and Q4 of 2023. And I think this has the potential now to surprise the markets, actually, that we are going to see not only cryptocurrency prices or Bitcoin price going to potentially 30,000. I mean, I engaged in that trade right now, so I committed my money to where my mouth is, as you just saw. So obviously, I believe this trade could work out very well. But we should also see the same on the stock markets. Luckily, we see a little bit of decoupling actually from, excuse me, of Bitcoin from the stock markets lately. Good. I'm scanning through a lot of questions. Thank you, guys. Happy to see that you are also interested in trading this pattern. Yeah, okay. This is a very good question from Rhyme Ray. This move seems very interesting. Do you think that altcoins will run after Bitcoin and the bull market will start? Yes, this is actually something we usually see. Thank you for that question. And I kind of was always saying the last month, for me, like a bit the missing ingredient here. So let me make this a bit bigger for you again. So this is the Bitcoin dominance chart. Oh God, where do I have my chart here? Let me zoom out here a little bit. Where I have been saying this for a while now, actually since September, October of the last year. In my opinion, for a new bull market to start in cryptocurrencies, we need to see Bitcoin dominance go to at least 46 to 50%. We scraped on this already. So we have seen since September the dominance going up all the way here from around about 39.5% to in the top about 45%. We saw that it still should go a little bit higher, 46 to 50% minimum, in order to start the new bull market. And a new bull market in cryptocurrencies always in history has always been initiated by Bitcoin. After that is done and we see Bitcoin run again, dominance will slowly go down again, because then we will come into the season where we will see altcoins outperforming Bitcoin. I did a video on my top picks for altcoins actually last year in May. So if you want to go and search for it on the channel, be my guest. I think they are performing pretty well, especially one of them. For me, the new trend probably is going to be also something like AI coins. Like everybody is exciting about AI at the moment, right? I just read this morning, Google coming out very, very soon with their own version of ChatGPT, which is a super mighty, powerful tool, and it's going to shape every market and every crook and nanny of the economy in the next year. So if I would have to choose altcoins right now, I probably would pick some projects that are associated with AI, but they really have to do something with AI, not just print it on their coin or onto their project. In reality, they are just a scam. But it's a story for a different day. Maybe we should do actually a video on this in the future. All right, let's go. Yeah, that's a good point too. We would see a little bit of correction ideally first before we really see the bull run going off. You could be right there. So this is also wrong one here. This one, what I've been saying, ideally for me, actually, for a really good swing trade, it would have been that we see Bitcoin somewhere coming down here in the 20.5 to 21.5 thousand US dollar area to kind of blow off the steam. But I mean, it's Bitcoin we're talking about. It's cryptocurrency, and sometimes it surprises us. So I wouldn't be too sure to miss out on a trade like this, just because maybe you are trying to time the market perfectly. If we go down there, for sure, I will pick up. So down here, I mean, into this area, for sure, I'm going to pick up more swing trades, long positions in Bitcoin. But I'm not too sure if we're really going to do that. Let's see. I kind of hope actually you're right, because that would mean we can buy some more a little bit cheaper, right? Let's see, what else do we have here? Yeah, okay. This is not related to Bitcoin. Well, in a way, also related to cryptocurrencies, because everything is connected, obviously. I like the question, Osama Al-Nasser. What is the reason for the decline of the euro and gold other than announcing an increase in unemployment? Well, it's not. It's a decrease in unemployment we saw there being announced last Friday. So the job market in the USA is super, super strong at the moment. We have historically low unemployment rates, and this is something the market doesn't like. And it's a bit schizophrenic, actually, if you think about it. The market goes down because there's a record employment in the USA. Why should that? I mean, that indicates that the economy is running, right? So the problem here is that the Federal Reserve Bank would actually like to see unemployment go a little bit higher, because the US economy is highly, highly driven by consumer spending. And if people do not have so much money in their pocket, they cannot spend so much, which would mean there's not as much demand. And a lesser demand on a market you can always meet by reducing prices. So the the supply, the price of the supply has to go lower, which then would mean we would see inflation rates coming down. This is why the market actually tanked so hard on Friday, because it was everybody was expecting impacts of a recession for the USA, so a worsening job market, which would then additionally bring down inflation. Inflation coming lower then is, sparking the fantasy in the heads of many traders again that the Fed soon is going to start decreasing interest rates again, which then would mean a new bull market in stocks and also, of course, cryptocurrencies being initiated. It's a bit schizophrenic, and if you think about it, it's also not something good to say. I hope that the unemployment goes higher, so inflation goes down. After all, we are talking about families not being able to pay rent anymore or buy food. But it is what it is. It's undoubtedly that those connections are there, of course. Let's see. Sam Wallace is asking, do you think we can depend on this cross only to go long, or is there something else? Yes and no. So as we just, we did a little bit of research just now, so I walked you through it. And we've seen that in the past, this pattern played out usually pretty fine, as a success rate of around about 60 to 65%. So we could take it, of course, as a pattern that we use to enter as the only pattern, as the only reasoning to enter a long position. I mean, I just did this actually. Of course, if you want to play it smarter, you always have to see things in context of other things as well, right? So you need to also take into account what is the stock market going. There's a high correlation between Bitcoin and the stock market always. You have to take into consideration also what is the interest rate environment, especially in the USA, and so on and so forth. That would be the smart move, of course, to take this into consideration. However, in my opinion, sometimes there are chances on the market where the risk-reward ratio is so good that I'm willing to take them just based on technical indicators. And this is coming from somebody who is like very much a macro fundamentals trader, that I look at. As I just showed you, I think if I have an upside potential of minimum 40%, and I just need to risk 15% downside potential for that, that's not too bad. That's a good trade I would take anytime. I hope that answers your question. Okay, one more question, and then we have a half hour already. All right, that's a nice one here. That's a good last question from High Fun. I hope I'm pronouncing this correct. The world has gradually accepted Bitcoin. Would you like to talk about that statement? So the statement being here probably the world has gradually accepted Bitcoin, if I understand you correctly. Yes, I think that's true. We've seen Bitcoin maturing into an asset class that is now also being taken seriously or more seriously by institutional investors. So as a matter of fact, there's a new EU regulation, for example, that allows banks in the Eurozone now to have Bitcoin, I think up to 1 or 2% of Bitcoin on their balance sheet, on their reserves. And that's a pretty awesome thing, because that is kind of the EU regulator saying like, yes, Bitcoin is here and Bitcoin is going to stay. As a matter of fact, we've seen the hash rate, new records in the hash rate of Bitcoin in the past days and weeks as well. So the decentralized network continues to expand, continues to get stronger. And I think this is going to be, the narrative for Bitcoin in the upcoming years, in the new bull cycle. So in the 4 years that are going, or 3 years that are going to follow now in 2023, 2024, 5, maybe 2026, that Bitcoin will be accepted not as a means of payment so much, but as a means of having a reserve as a company on your balance sheet or as a private person or in your cold storage that nobody can touch, that you're not dependent anymore on some weird politicians or central bankers deciding if, you know, what you have saved is still worth something 2 years from now or not. So yeah, I very much agree with a statement, and I hope if we talk again in 3 or 4 years, it's the general opinion that Bitcoin is accepted. Okay, good. Thank you for your questions. And thank you for joining me here. As always, please leave us a like, subscribe to the channel if you haven't done so already. I've seen a lot of questions here. Many of you guys are on Discord also, so we're giving away a 25 US dollar bonus onto your trading account here at PrimeXBT. If you don't have a trading account yet, you'll find everything underneath this video in the description that you need to know how to open a trading account. I'm going to see you again very, very soon. Take care, everybody, and always remember to use the stop loss. Bye-bye.